Hello everyone. Welcome to another video of the monthly analysis of Indian share market. In this video, I am going to share my analysis of the Indian share market's performance for the just concluded month of September 2025. I am going to share my commentary on these 7 points. First, headlines of the month. Second, key market indices performance. Third, sectors performance. Fourth, IPOs and other market activities. Fifth, gold, silver, currency, and oil prices. Sixth, top 10 global economies performance. And seventh, future outlook and conclusion. So let's see each of these points in some detail. Before moving on, please read the entire disclaimer carefully. So let's see the headlines of the month for the Indian market. First is the market correction. Indices face prolonged selling pressure. US tariff shocks on pharma and H1B visa fee hike slams IT and pharma stocks. Relentless FPI outflows worsen market sentiment. Rupee hits record low against US dollar. And Nifty index rejig has announced Indigo and Max Healthcare to enter Nifty 50. Now let's see the headlines of the international market. US Federal Reserve cuts interest rate by 25 bps. Gold price hits new record high amid economic uncertainty. US China trade tensions reignite with new tariff announcements. European economic sentiment rises, but recovery remains fragile. And Goldman Sachs warns of increased volatility in October. Now let's move on and see the key market indices performance. This graph shows the performance of the five broader indices of the Indian share market: Nifty 50, Nifty Next 50, Nifty Mid Cap, Nifty Small Cap, and Nifty 500. So Nifty 50 gave returns of 0.77%. Nifty Next 50 gave returns of very good return effects of 3.21%. Nifty Mid Cap gave 1.47% returns. Small Cap gave 1.18% returns, and Nifty 500 gave 1.23%. So Nifty Next 50 gave very good returns in the last month, but Nifty 50 overall was quite muted, I would say. Let's move on and see the sector's performance. So this graph shows the performance of the all the major sectors of the Indian share market, and it is quite evident from the first look itself that that most of the sectors, first of all, gave positive returns, and secondly, there were uh, few sectors which were simply outstanding. For example, PSU Bank. PSU Bank sector gave 11.41% return. It is unimaginable. Metal gave 9.73% returns. PSE 6.7%. So there were several sectors which gave very good returns, but there were few which gave bad returns as well. For example, IT minus 4.34, media minus 4.28, consumer durables minus 3.79. So it's sort of the month was sort of extreme, very high returns for in some sectors and very low returns in some sectors. Let's move on and see the IPO and other market activities. So in the IPO space, on the main board, there were 35 IPOs open for subscription in September, and 17 were listed. In SME, 57 open for subscription and 36 were listed. So it seems there were a huge number of IPOs in the market in month of September. In terms of OFS, there were three OFS: Blue Jet Healthcare Limited, Indo Solar Limited, and Emco Elcon India Limited. Now, SEBI's actions. SEBI took several important actions in the month of September, and I have picked top five from them, and we're going to see a bit about all of them. So, first is the stricter rules for derivatives, that is F&O trading. SEBI approved and initiated the phased rollout of stricter rules for equity derivatives, that is futures and options segment, primarily to curb excessive speculation and link derivatives risk more closely to cash market liquidity. So SEBI has published a report several months back in which it has highlighted that more than 90 or 96% retail investors lose money in FNO. So SEBI is trying to actually restrict uh, retailers in FNO segment, and they are taking several measures to ensure that. The second was the easing of minimum public shareholding, that is MPS timelines. SEBI rationalized the timeline for very large companies to comply with minimum public shareholding MPS norms, aiming for a smoother phased dilution and stable IPO pipeline. So they have taken two steps in it. First is the extended timeline for large issuers. Companies with a market capitalization between 50,000 crores and 1 lakh crore now have 5 years, which was earlier 3 years, to reach the 25% MPS threshold. And second is minimum public offer MPO options. Large companies were given flexibility to meet the MPS requirements via a minimum public offer of a fixed monetary value or a minimum percentage of post issue market cap. The third major action that SEBI took was the changes to IPO anchor investor framework. SEBI refined the norms for anchor investors in IPOs to enhance price stability post listing and strengthen the domestic institutional base. They have taken two steps in it. First is the extended anchor lock in. 50% of the anchor investors' allocation is now subject to an extended 90-day lock in period, up from earlier 30 days for the entire allocation, to reduce volatility immediately after listing. So it's a good step. Next is the increased domestic anchor quota. The overall reservation for the anchor portion was increased, with a specific portion reserved solely for LIC and pension funds, strengthening the role of domestic long term capital. The fourth action that SEBI took was the mutual fund reforms for inclusion and investor protection. SEBI introduced several reforms in the mutual fund industry aimed at reducing costs for investors and boosting penetration in smaller cities. So they took two major steps in this direction. First is the reduction in exit load cap. The maximum permissible exit load that a mutual fund scheme can charge was reduced from 5% to 3%. And the second action that they took was the revamped B30 incentives. What is B30? B30 is beyond top 30 cities. Distributor incentives for new inflows from B30 cities were revised, capping them to focus specifically on new individual investors identified by a new PAN to promote financial inclusion in untapped markets. And the fifth important action that SEBI took was the barring of man industries and executives over fund diversion. So, in a key enforcement action, SEBI barred Man Industries India Limited and three of its top executives, including chairman and managing director, from accessing the securities market for 2 years. The action was taken over allegations of fund diversion, round tripping of funds, and misrepresentation of the company's financial statements due to non consolidation of a subsidiary's financials. This was a notable measure reinforcing SEBI's focus on strict corporate governance and protection against siphoning of funds. Okay, next is the miscellaneous part. So, FYs were again net sellers in the month of September with minus 35 point minus 35,301 crore rupees outflow, and DIIs are again net buyers with 59,582 crore inflows. Mutual fund SIPs again stood very strong with 28,200. This is the data for August, which was released in September. And the Bitcoin uh, was closed at 1 crores 1 lakh 31,155 rupees. Let's move on and see the gold, silver, currency, and oil price trends. So gold was closed at around 1,25,900 for the 10 grams or 24 karat gold. That was its high as well, and the low was around 1,06,000 odd. Silver, it closed at around 1,51,000 per kilograms. Again, it was its high, and low was around 1,23,000. Currency, rupee was closed at 88.84 against 1 USD. That was again its high, and the low was 87.88. And oil, Brent highest was $70.76 and the lowest was $65.07 per barrel. WTI highest was $66.42 and the lowest was $61.45 per barrel. Now, this graph shows the top 10 global economies' performance in the month of September. And uh, the first look of this graph itself told that most of the economies gave positive returns in the month of September, except Germany. The best performance was given by Canada with 5.11% returns, followed by Japan with 4.83%, and followed by America with 3.53%. So all the markets gave positive returns except Germany with minus 0.20% returns. So now let's move on to the final point, which is the future outlook and conclusion. So there are six key factors and trends to watch out for in the month of October. First is the Q2 financial year 26 corporate earnings season. So with the September end, the quarter 2 has also ended, and the companies will start coming up with their results in the month of October. So let's see how the market responds to that. Second is the RBI Monetary Policy Committee decision. So it is supposed to be shared on 1st of October. So by the time you are seeing this video, the decision would be out, and based on that, the market would have reacted by that time. Third is the FIIs and DIIs flows. Fourth will be the global geopolitical and trade policy developments. May India and US may reach a agreement. Then 15th October was a date by the time the American government can uh, raise a case against their court in the Supreme Court. So that is an important date as well. So there are several things. Let's see how it turns out. Next is the festive season consumption and demand. So October, the festive season has started in India and it would go for a couple of months from now, and the consumer durable sector should perform quite well in this. So we'll keep an eye on it as well. And finally, the mega IPOs activity and impact on market liquidity. So there are two mega IPOs which are scheduled for October till now. So first is of Tata Capital IPO around 15-16,000 crores, and second is the LG Electronics IPO again similar 15-16 crores. So these are the two mega IPOs, and whenever such mega IPOs comes in the market, they generally suck the liquidity from the market. So that is something again which could be a one of the significant event for the month of October. So finally, to conclude, the Indian share market ended September on a cautious and a bearish note, with Nifty and Sensex both falling for the seventh consecutive sessions due to persistent FII outflows and global trade uncertainties. Looking into October, market experts project the indices to trade in a narrow, range bound manner, with crucial support levels needing to hold firm amidst a sell on rise approach. Historical data although shows October often favors the bulls, but sustained FII selling remains the primary near term headwind. This is all from my side in this video. Thanks for watching it. Please like, comment, share, and subscribe to the channel. Goodbye and happy investing.